Continuing with our coverage at the Quebec Mining Conference in Quebec City, joining me is Glencore's Michael Welch, VP of Operations at the Raglan Mine in Northern Quebec. Mike, thanks for joining me today.
Thanks, Alex, for having me.
So the Raglan Mine, huge success story not even considering where it's located. It's at the northern tip of the province, subarctic temperatures. Yeah. Tough to do anything out there. So, I mean, tell us a bit about how you guys managed to get that from exploration to development to successful production.
Yeah, it's a big question. I mean, there's lots of moving pieces to that obviously, but obviously it's logistically complex because it's a remote site. It's 1,600 kilometers north of any kind of major center, right? So first of all, just access. Second of all, you're above the tree line. We're in permafrost. The biggest issue the project had even before it started production was how to get concentrate off the site. One of the biggest breakthroughs back in the early 90s was to prove that we could get an icebreaker in at any point during a 12-month calendar year. And with the success of that one particular voyage, it kind of broke the barrier for the economic model, if you wish, to say, okay, not a problem getting concentrate off the site. So that really set the financial tone. After that, it's build the site. So you've got a very short construction time period. So modular construction was a big thing for the mill, the accommodation complex. So that was good from an engineering perspective. That helped out a lot. The next biggest issue was around production. We're not allowed to drill dry, so you have to lubricate percussion drilling underground. So of course, we work in permafrost, and the average ambient rock temperature is -5 degrees. So without any kind of brine solution or anything like that, you end up with 2 or 3 feet of slush in the drifts, right? So we drill with a brine. So you can imagine what a salt solution does to your equipment and does to the working environment, but that allowed us to maintain a certain degree of operational efficiency underground. So that was one of the biggest steps. From an exploration perspective as well, we were only drilling 4 months of the year at the time, and exploration really drives the success at Raglan because we own 70 kilometers of our own strike length, and there's a lot that's really underexplored at this point in time. And because we do have a series of mining clusters and lenses associated with those clusters, what really drives our economics is our grade, because we're limited with the amount of production we can put through at the mill based on our agreement with the Inuit, our Raglan agreement. So grade is king in our case, for sure. There's no doubt about it. So if you can make those high-grade discoveries quicker and get them in your life of mine plan quicker, your economic payoff is better. So the trick was to get from 4 months to 10 months a year drilling. Get those meters into the ground, get that information a lot quicker, help your mining plan, and help your capital efficiency. So that's a lot of lessons learned over the years. Right, 15 years of production. So other than that, really, it's the logistics. You know, we use 2 737-200s to get people and fresh supplies to the site 5 days a week. We also use a Class 1C icebreaker to bring in fuel, permanent supplies, and consumables, and it takes our concentrate out. So we have a blackout window 3 months of the year where we're not allowed to come in and break ice in Deception Bay. So we ship normally 7 to 8 times a year with the icebreaker. So, you know, all the logistical complexities that go around with planning and scheduling.
You mentioned the enormous strike length you have available to you. The resource at Raglan just continues to grow. Initially from what you had to, and it's still possible that it'll keep growing?
Absolutely. I mean, just as an example, we started off with a resource base of 18 million tons and a nominal mine life of 20 years. So effectively right now, Raglan, if we'd done nothing, we'd be in the mode of trying to shut down right now. But based on the success rate that we've had over those years, we're looking at a mine life that takes us up to 2040 right now.
Now, obviously, the mining industry, the buzzword is cost cutting. That's the big focus, has been for 2013. What kind of cost cutting measures has the company undertaken at the Raglan Mine?
I try not to use the connotation cost cutting because it sounds a little bit negative. So it might sound a bit weaselly, if you wish, if that's a proper grammatical word. Operational efficiency is what really we're looking at. So we're really big on continuous improvement. So what it really comes down to, what work do you want to or have to do, and how are you going to do it? So how do you lean your organization structurally to have the right people and the right resources in place to do that work? So we do a lot of work on continuous improvement, both on the soft side. So that's like active supervision and coaching and communications between the first line supervisor and the guys that do the actual physical work, whether it's in the mill or underground. That's a key interface for us. The other one is to continuously improve on operational efficiencies through ideas. So take an idea that helps drive your cost down, come up with the key action items that'll help that idea be successful. You lock it in, you monitor it, you control it, and once you achieve the financial objective, you've locked in that cash flow gain if you wish, and that just goes straight in your budget, and then you slowly drop the budget down, right? So other than that, you're going to need some technological step changes along the way, so those don't happen very often, right? So, but it's through your people and through your processes.
All right. Let's wrap it up with nickel prices now. What's your outlook for, 2014 moving on?
It's a bit of a two-sided coin here. One is, for the first time in a long time, there's actually not a lot of variability in the price. I'll say 620 to 660 in that range. But unfortunately, it's at the low end of the scale, right? You're in the bottom $6 range. We don't see a whole lot of change in the global nickel market for at least, I would say, 24 months. We really don't start to see a balance in the nickel market probably till late 2016. I would say probably even more towards 2017. And a couple of game changers there. One is obviously the nickel pig iron production out of China has caught a lot of people off guard. It's replaced new production that essentially new project production that would have come on. So all the projects that are just finishing up right now and coming into production right now, the Onça Pumas, the Ambativis, the Coney Ambos, they're already in the feed profile projection. There's no new projects per se in the pipeline coming along, because the Chinese are now producing at a rate. Well, this year they're going to produce 510,000 tons of nickel. That's a lot of capacity that they've taken out from new projects. So, and that's not going to stop anytime soon. I mean, they're producing at a rate of 600,000 tons a year. So it's quite concerning for the market. So once again, it's stabilized, but we're very much in an oversupply for the next couple of years, and we don't see much of a change until probably 2017.
All right. Well, good stuff, Mike. Appreciate the time you took to speak with me.
Thank you very much for having me. Appreciate it.
And thank you for watching our continuing coverage of the Quebec Mining Conference in Quebec City. If you have any comments or questions, please don't hesitate to send them to newsfeedback@kitco.com, or you can follow me on Twitter @Alex_Letourneau. Have a good one.